Well, good afternoon and a very warm welcome to Stewardship's Trustee and Treasurer Lunchtime Dial-In webinar. Whether you're a regular listener or you're new to Stewardship, it's great to have you with us today. My name's Jackie Fletcher and I'm Head of our Treasurer Services here at Stewardship. I'll be your host on today's dial-in, and it's my delight, as always, to be joined by our resident experts, Alan Howe and Stephen Matthews, who are both senior consultants here at Stewardship. Now, I know that many of you will have joined us before, but if you're new to Stewardship, then I would just take a moment to explain our vision, which is for the world to encounter Jesus through the generosity of his church. One of the ways that we seek to achieve this is by strengthening Christian causes, and the purpose of this dial-in is to equip and encourage you in the important role that you have within your organisation, and in doing so, enabling your church or charity to confidently live out your mission. If you'd like to find out more about how we could support you, take a look at our website or call John Keskes, who is our Head of Partnerships. His details are on the screen now. If you have joined us by phone, then we will send the slides out after the call. If you'd like to make sure you receive the follow-up materials, including the podcast recording, you'll need to ensure that you are signed up to the dial-in mailing list. If you haven't yet done so, you can find the sign-up form at www.stewardship.org.uk/dial-in. Just scroll down to the bottom of the page and add your details. Okay, let's take a look at today's agenda. We have a couple of general updates for you, followed by several COVID-related articles because we are still not out of those woods. So firstly, we'll be looking at an update on the 5th Money Laundering Directive, the importance of trustees, and a Charity Commission review on the disqualification of a pastor. The COVID-related articles will cover accounts filing and serious incident reporting, an update to the furlough scheme and an introduction to its replacement, and a review on planning, monitoring and financial assistance for those in need. And finally, we'll have our Q&A session where you get to ask your questions of our panelists. Thank you to those of you who've already sent in your questions by email. This really helps us to understand the issues that you're grappling with at the moment. We'll cover these later in the call. Now, we do absolutely encourage participation. This call is for you. So if you have any questions, please do use the chat function to ask them, and we'll answer as many as we can on the call today. Click on the chat icon, type in your question, make sure it's addressed to all panelists. Those of you who have joined us by phone, you won't be able to ask a question on the call today, but hopefully the resources that we send out afterwards will address any issues that you may have. So without further ado, let's begin with the first item on the agenda, which is an update on the 5th Money Laundering Directive, brought to us by Stephen.
Thank you, Jackie. Now, the 5th Money Laundering Directive update. In October and February's dial-in, we give details of the requirements of this legislation on organisations registering with the Trust Registration Service, or TRS, and how it impacts charities. We said we'd give an update when we had one, and we now have that update. What is pleasing is that the challenge to the government on this effectively based on Stewardship's detailed work, and even more pleasing is the government has taken up my colleague's point about excluding churches that are accepted from registration with a charity commission from the HMRC Trust Registration Service. The particular point was that under the draft regulations as they were originally drafted, the following charities would have needed to register with the TRS. Charities in England and Wales with an income of under £5,000, as well as charities in Northern Ireland that were waiting to register with the Charity Commission for Northern Ireland itself, because they were not currently registered by the relevant body. In general, it's now clear that those types of trusts will be exempt from registration on the TRS. At this point in time, they've not specifically responded to the query on the Northern Ireland transitional point, but our reading of their intentions is that Northern Ireland charities waiting to be registered will be exempt. So the conclusion overall, and after all of that, is good news. No need to register with TRS if you are a charity. Thank you.
Okay, thank you, Stephen. That's really good to know. So let's move on to our second item, which is the importance of trustees. And this is going to be brought to us by Alan.
Brilliant. Thanks, Jackie. Yes, now being a trustee of either a church or a Christian charity is very important, and hopefully you find it a very rewarding role within that organisation that you serve. We know that good, effective churches and charities need good, effective trustees. as an essential part of that broad and diverse leadership team. Romans 12 draws that familiar picture of the church as the body of Christ, urging each person to take their place for the benefit of all. And now, as churches and charities have grappled with the ever-changing COVID guidance provided by the government, more than ever, trustees are proving a valuable and indispensable part of that body. So what do trustees do? What powers do they have? How do you find good ones? How do you blend the spiritual requirements of leading a church or Christian charity with the governance requirements? Well, to help answer those and other questions, we've written a series of briefing papers freely available on our website looking at different aspects of trusteeship. The introductory paper, Charity Structure and Governance and Overview, is intended to set the scene for the other papers in this series. Using some fundamental questions, this paper paints a broad picture of charities and their governance structures and provides a context into which the other papers can better be understood. What to look for in a trustee examines what churches and charities should look for in a trustee in an age where greater levels of professionalism than ever are being expected, both by the charity regulators and also by the general public. Once the hurdle of eligibility is cleared, this paper goes on to consider what skills, but just as importantly, the character and the heart of a prospective trustee. A trustee with a real heart and passion for the church or charity that they serve will often be able to make good things happen, in stark contrast to the widely held image of trustees being a block. For your church or charity to thrive, it will need an effective trustee board, one able to make timely, well-informed and well-balanced decisions. The paper, Effective Faith-Based Trustee Boards, looks at what running an effective trustee meeting looks like, but much more importantly goes beyond that to consider the roles and actions of trustees away from those meetings and how trustee boards can develop to become even more effective. The Charity Commission requires trustees to manage their charity's resources responsibly. Now, whilst this extends beyond financial management, managing the church's finances and its financial assets form a significant part of this responsibility. The paper Trustees' Financial Responsibilities and Reporting looks at trustees' responsibilities when it comes to accounting records, budgets, financial reporting, and all other things financial. Trustees have extensive powers over how a church or a charity is run. But as Spider-Man once famously said, with power comes both responsibilities and expectation. I'll let you Google that clip later. And our paper, Trustees' Appointments, Powers, Duties and Responsibilities, seeks to explore all those aspects, drawing heavily on the Charity Governance Code and also the Charity Commission Guidance CC3, the Essential Trustee. Sadly, Spider-Man does not get feature in either. Churches in the UK are spiritual entities, working out what it means to be part of the family of God. But in almost all cases, they are also legal entities. As a result, they need to be steered by spiritual leaders, but also work within the ever-changing and expanding UK regulatory framework. The paper Spiritual Leaders and Trustees looks at how those dual goals can be achieved and at some of the leadership models that we see operating in UK churches. As I said, all of these papers are free and can be accessed through the resources section of our website. And we would encourage you to take a look to see how some of the issues discussed may impact your church or charity.
Great, thank you, Alan. And if you are a trustee or a leader of a church or charity, you may be interested in our popular trustee training programme. In a Twilight webinar, the training explores how to comply with all the legal requirements of the role, while still maintaining a focus on the biblical principles and teachings on governance. The event being held next week is sold out, but you will be able to book for the November event from next Friday, the 23rd. You'll find the details if you are interested at stewardship.org.uk/events. So next up, Stephen is going to bring us details of a charity commission review.
Thank you, Jackie. Yes, this is called P versus Charity Commission for England and Wales. It's the first appeal against a commission disqualification order. And it's a very sad case as far as I'm concerned. It concerned an appeal against a commission disqualification order made under Section 181 of the 2011 Charities Act. The order made by the Charity Commission banned this gentleman P, the former senior pastor of our church in London, from being a charity trustee or holding a senior management position in any charity for 10 years. The church was a registered charity with income just under £1 million a year. The case is significant because it is the first time that the Commission's use of their discretionary disqualification power has been challenged with the tribunal. And secondly, because the power was used to disqualify someone who held a senior management position but was not officially a trustee. It shows that being behind the scenes is not of itself a protection. The tribunal considered the grounds referenced in the Commission orders with the disqualification, which were that P had made unauthorised use of the church's credit cards, used the church's funds to pay for overseas trips without authorisation or evidence that the trips were actually for the charitable purpose of the church. Thirdly, influenced church members to attend a meeting in breach of the terms of his suspension from employment with the church. And finally, not allowed inspectors to access all parts of the church's property to the extent that the church's interim manager was required to obtain a court injunction to secure adequate and proper access. In my own words, P had taken it that the church charity was his, and he was not subject to the laws of the country when it came to charities. So, what was the outcome? The tribunal concluded that the Commission was correct and justified in making the order to disqualify P from charity trusteeship. It agreed with the Commission's finding that P was the person primarily responsible for the proven misconduct or mismanagement in the administration of the church, meaning that the criteria for making the order were satisfied. Secondly, that the Commission's disqualification order was appropriate because P's conduct was serious. Thirdly, harm was caused to the church for which he was primarily responsible, and there was a risk of further harm arising from further misconduct or mismanagement if the order were not made. They also agreed that the 10-year disqualification period was proportionate given the seriousness of what P had done. And finally, that it was right that his disqualification should apply to charities generally and not just this one. It held, to quote, "In considering the question of proportionality, the key issue is the need to increase public trust and confidence in charities and to promote compliance by charities with their legal obligations in the proper administration of charities." Now, what's my perspective on this? My perspective is what we see here is a massive misunderstanding by P himself of the role that he had in the church charity. He may have had a major or even critical role in the family of God and amongst the people that made up the church, but he had no right to act as he did in his role as a charity leader. It does appear that Romans 13 was not foremost in his mind at the time. We have to remember that we are subject to both the principles of spiritual life outlined in the Bible, but also the laws of the country in which we live, which include charity law if your church is also a charity. But it's also worth noting that there were only 3 trustees. There were the official ones recorded at Charity Commission, which isn't many for a charity this size. This suggests a lack of accountability which had fatal consequences. So this links back to what Alan has just spoken about, the real importance of a good trustee body. But what's also interesting is the last account of the charity. These show corporation tax liabilities for non-charitable expenditure plus employers' taxation, probably for the same reason, of around about £500,000. And secondly, a claim against the church from an individual of just over £100,000. It doesn't automatically follow, but my experience is if one area of regulation is being ignored, then there are very often other areas that also end up surfacing. So, linking back to the principle we see as so critical to church and money, that of the AAA rating, those 3 A's standing for good attitude, good accountability, and good administration, which are vital to financial health of churches and wider charities. We see a failure of all 3 in this case, which is why the outcome is as it was. In terms of attitude, again, it appears to me, although I quickly add that I only know what is written, I don't know the inside of this case, but it appears that there was a failure to understand what I call the Billy Graham principle. Now, Billy Graham knew the vital importance of having the right attitude and financial accountability in his ministry. So there was a failure of that principle. Secondly, there was a merger of personal interests and assets with that of the charity. Thirdly, a refusal to accept that there were other stakeholders than himself, and so a failure to understand Romans 13 in this context. Regulatory law is not to be flouted. And in terms of accountability, there was no involvement of others in significant transactions that benefited P and not the charity, so deciding that he alone had the authority to make those decisions. Plus a weakness in only having a small and probably passive board of trustees. And finally, in terms of administration, a failure to deal with sensible financial control, a failure of tax admin, and some form of legal claim as well. Now, the charity is now closed. The final statement of the interim manager states, in light of various developments, including the difficulties faced with appointing new independent trustees, the interim manager, with full cooperation and support of the Charity Commission, has taken the decision to wind up the charity. We understand that for church members and those who have long been connected with the church, that this is disappointing news. This course of action has not been taken lightly and is considered to be the only option given the findings of the investigation. You can see why I called this a very sad case.
Thank you, Stephen. That's a really cautionary tale. So don't forget to be typing in your questions as we go through the call, if anything arises. What we're going to do now is turn to our COVID-related issues. We're going to start with accounts filing and serious incident reporting, and this is brought to us by Alan.
Great, thanks, Jackie. Now, I imagine that you're pretty much fed up of hearing about this as I'm writing about it, but undoubtedly COVID-19 has impacted many aspects of charity life. In this next section of the dial-in, we're going to be looking at three today, starting with the production and the filing of accounts. The Charity Commission and Companies House have taken different approaches to this issue. So starting with the Charity Commission, they've issued a statement in which they've said that during the coronavirus pandemic, they will be as flexible and pragmatic as possible in its approach to regulation. So whilst they're still asking charities to file their accounts on time, if at all possible, the Commission has said that when an imminent filing deadline can't be met, they can be contacted with a view to arranging an extension. Now, as there's no indication as to what imminent means, we would suggest that if you have any concerns about being able to meet your filing deadlines, that you contact the Charity Commission as soon as possible. This goes both for the accounts and the annual return. Now, our experience suggests that the Commission is indeed being flexible and are consistently granting extensions when asked. Generally, it appears that the Commission are not imposing new deadlines, but will be in contact with charities once accounts are due. Now, Companies House have taken a different view. Towards the end of June, temporary modifications to filing regulations were signed into law that extends filing deadlines, generally by 3 months, for companies whose year end falls between the 27th of June 2020 and the 5th of April 2021. Now, there are rules that apply in special circumstances, and these can be found in the guidance, and we'll provide a link to that guidance in the follow-up materials. Whilst online filing of accounts is being encouraged, be warned that currently Companies House is only able to accept online accounts delivered through selected software. And as such, for many churches, filing hard copy accounts remains the only practical option. At the time of writing, there remains no public access or letterbox at the London office of Companies House. All mail and paper documents should, for the time being, be directed towards the Cardiff office. There is also restricted access to the Companies House offices in Scotland and Northern Ireland. When it comes to serious incident reporting, the Charity Commission has said that it is the responsibility of the charity trustees to continue to report serious incidents using the current guidelines. The same conditions and thresholds as already exist continue to apply. So the question remains whether the incident is serious in the context of your charity, not in any broader context. Where the trustees come to this conclusion that a report is required, then best practice would suggest that it be made promptly. Again, a link to guidance on how to report a serious incident will be provided in the follow-up materials. Jackie will now take a look at the ending of the furlough scheme and how its replacement might impact churches and charities.
Thank you, Ellen. Yes, after many stewardship updates over the last 8 months, this is possibly the last time that we expect to talk about the furlough scheme. This has been a lifeline to many, meaning that small organisations have been able to keep their employees on despite having little or no work for them to do during the pandemic. Many people have benefited from having a regular, albeit reduced, income at this really difficult time. However, we're told that all good things must come to an end, and the government's job retention scheme is no exception. The scheme will close on the 31st of October, and the government have now announced that the deadline for making claims under the scheme will be the 30th of November 2020. Please be aware that we have tried to appeal on behalf of our clients against previous hard deadlines, only to be told that there is no appeal process and no way to submit a late claim. So if you are using the scheme, do make sure that you submit all of your claims in time. Now, HMRC have announced that there will be financial penalties for anyone overclaiming under the furlough scheme. This would therefore be a good time to check that your claim calculations are accurate and that you've not claimed for anyone or indeed anything that you shouldn't, such as maybe claiming employer's national insurance when you're already claiming the employment NI allowance. If you do find that you've claimed too much, or conversely not enough, then you should contact HMRC within allowable timeframes. And this is the later of either 90 days from the receipt of funds that you were not entitled to, or 90 days from the point at which your circumstances changed and you were no longer entitled to a grant, or the 20th of October. That would mean you would avoid penalties, but in any case, do report any errors before the 30th of November and arrange a payment or repayment by that date, because after that date, there are no adjustments that can be made. Do also make sure that you refer to the latest guidance, which will be included in the resources in the follow-up email, just to ensure that you have kept all of the relevant paperwork in case of a future HMRC inspection. All records relating to the furlough scheme should be kept for 6 years. Now, for those of you who have furloughed employees and made an eligible claim under the furlough scheme, you may also be eligible to claim the job retention bonus. This gift was announced by the Chancellor back in July to encourage employers to keep their furloughed employees on the payroll once the scheme has ended. The employer will be able to claim £1,000 for each eligible employee. So who are your eligible employees? Well, these are those who were included in an eligible furlough claim under the job retention scheme, and they have been brought back to work and they are still on the payroll at the end of January 2021. They mustn't be working their notice during this period, and they must have earned a minimum average of £520 per month between November and January. So that's £1,560 in total across the 3 months. Claims can only be made between the 15th of February and the 31st of March 2021. So do put a note in your diary if you intend to take advantage of this kind offer from the government. The guidance will be updated towards the end of January with details on how you can make your claim. So what happens when the job retention scheme ends? Well, the government have now introduced the new job support scheme, which is due to commence on the 1st of November 2020 and will run for 6 months to the end of April 2021. Under this scheme, the government will still provide financial support, but on a smaller scale than under the previous furlough scheme. So this new scheme has been introduced for viable jobs, where employees are able to carry out at least 33% of their normal working hours. And this is for businesses who are facing lower demand over the winter months due to COVID-19. Employees cannot be fully furloughed under this scheme. And of the hours not worked, the government are going to pay 1/3 with a cap of £697.92. And the employer is expected to pay another third of the unworked hours. So using these minimum levels in an example, let's say that Bob is earning £1,800 per month and he can work 1/3 of his hours. So the employer must pay salary of £600 for those hours worked. For the unworked hours, i.e. the remaining 1,200, the employer can apply for a grant of 1/3 from the government, which is £400. And they must also top up a further third, which is another £400. Excuse me. This will result in Bob receiving gross salary of £1,400, or 77.7% of his usual salary. The mathematical among you will have picked up that the maximum grant from the government will be just 22.2%, so it is not as generous as the furlough scheme. And this new scheme also differs from the furlough scheme in that the employer cannot top up the pay above 2/3 of the hours not worked. We're still awaiting the official guidance to the scheme. Hopefully it will be forthcoming soon, but we will include a link to the web page in the follow-up email so that you can check for updates if this relates to you. This should also cover the expansion to the job support scheme announced last week for those businesses that are legally required to temporarily close under the new lockdown tiers. So the good news is that you do not need to have participated in the previous furlough scheme to be able to use the new job support scheme. It's open to all employers with a UK bank account and a UK PAYE scheme. And there is a financial test for larger businesses, although small and medium-sized enterprises will not have that test. You can claim for employees who are on the payroll at the 23rd of September 2020. They must have been included in an RTI submission on or before that date to qualify. Unlike the furlough scheme, they cannot be on notice of redundancy. In this case, they must be removed from the scheme and the employer will need to pay notice pay and redundancy pay in full. So the scheme's going to work a little like flexible furloughing. Employees can cycle on and off the scheme, and each working pattern must be arranged for a minimum of 7 days. Employers must agree the new short-time working arrangements with their staff and make any changes to the employment contract by agreement and notify the employee in writing. So this scheme will certainly help where you have skilled employees that you are keen to keep and you can afford to do so and you have some work for them. But there will still be a number of employers who just can't afford to keep on their staff on this basis. If you do find yourself in this position, then refer to our article on our COVID webpage, which discusses the different options available to you as the furlough scheme comes to an end at the end of the month. This article includes a recording of our employment webinar, which was held in June, and the latter part of that recording talks about the alternative approaches, along with some really helpful resources if you find yourself in a situation of having to consider redundancies. So do look out for our follow-up email after the call if this applies to you. Now let's go over to our final item for today, looking at planning, monitoring and financial assistance for those in need during the pandemic. Over to Alan.
Thanks again, Jackie. Yeah, so with those COVID-19 restrictions in place for the foreseeable future and extended lockdown measures now in place over large parts of the country, it's becoming increasingly evident that life is not going to return to normal anytime soon. In fact, some commentators suggest that from an economic perspective, this is early days and we've yet to experience the full financial impact. So as this situation continues to develop, we would urge church treasurers and finance teams not to take their eye off the ball. We are far from out of the woods and some difficult decisions may still lie ahead. So what is important over the next 6 months or so? Let's just recap on some of the things we've covered before. Firstly, planning and replanning. Now, most of the time, most of us have a pretty good understanding of our operating cost base and associated income levels. But sadly, now is not most of the time. And so we would urge treasurers, finance teams and trustees to regularly revisit plans, projections and budgets. Organisations that are reliant on rental or other forms of non-donated income are likely to be susceptible to large fluctuations in amounts received. Have you been able to open your rental space or your coffee shops? Are the organisations that previously rented space from you comfortable to return, or indeed do they even still exist? Have residential tenants lost jobs and livelihoods? Now, with the fluidity surrounding COVID restrictions, even where activities have started up again, there is no certainty that they will be able to continue. Organisations that receive income predominantly from donations are generally likely to be in a stronger position. However, even where donations have held firm to date, which appears to be the case for most of the churches that we're in contact with, there are likely to be further pressures in the future. As we just heard, the government's furlough scheme is soon to come to an end, and the fallout from the American election and Brexit are unknown factors likely to impact the UK economy and perhaps bring further job and income insecurity to many. So as a result, keep an ear to the ground and an eye on those donation levels. Expenditure is also likely to fluctuate more than we're used to. The purchase of PPE is perhaps the most tangible and obvious new expenditure. But what about increased license requirements if broadcasting worship music? Increased communication costs as churches pay for Zoom or other licenses? Upgrading technology to be able to provide enhanced online content? And increased postal costs as church pigeonholes and racks become redundant? Now, when planning, remember the importance of cash. I can't stress strongly enough the importance of monitoring cash levels. Even organisations with seemingly strong operating models and balance sheets have gone bust simply because they've run out of cash. So, what cash do you have readily available? Remember that this is unlikely to include cash held in restricted funds. Are all your bank mandates up to date? Can any investments be realised quickly if required? Can current debtors be quickly converted into cash? Now might be a time to increase the frequency of making gift aid claims. Are there balance sheet liabilities that are likely to materialise earlier than you may have expected? And remembering all these things, do not be scared to dip into your reserves. So what are the golden rules of planning in times of uncertainty? Can I suggest they might be? Number one, be constantly in prayer. Secondly, be prepared to revisit budgets and plans regularly. Thirdly, keep communicating with your leadership teams and your church congregations. Fourthly, remember the importance of cash. Fifth, be both realistic and flexible. Burying your head in the sand is going to help no one. Six, devise and agree backup plans, B and C, in the event that preset financial trigger points are met. Seventh, set financial trigger points for action, perhaps when you reach a certain level of reserves, making sure that you have sufficient time to act and for those actions to make an impact on the church or charity finances. And eighth, if required, act swiftly and decisively. Now, the flip side of seeing donation levels drop is the real human stories of people in your church suffering financial hardship. We know that different demographics have fared differently during this pandemic, with those at the younger end suffering perhaps the greatest financial hardship. But that does not mean that others are not also suffering. We are aware of many churches that put aside some money into a COVID fund made available to people suffering financial hardship. Now, for some of the reasons that we've mentioned before, we might be nearer the start of greater financial hardship than we are towards the end of it. And so those funds might be needed more than ever. There are safeguards to consider, and it is likely that support amounts will be small. But do not underestimate the financial, emotional, and spiritual encouragement that a small gift or food parcel or a small loan can be to a person or family that is struggling. Now, included in some of our earlier guidance material was information on this topic, and we'll provide a link which covers most of that again, which you may want to refer to if you're looking to implement such a scheme. So in conclusion, it's difficult to know what the next few months will bring, but having come this far, now is most certainly not the time to take your eye off the ball.
Thank you, Alan. That's really helpful advice. So that brings us to the end of today's agenda. However, as is often the case, a couple of small items have arisen in the last day or so. So I'm just going to mention them briefly here, and we will put details in the follow-up email. So the first concerns churches that have previously been accepted from registration with the Charity Commission. If this applies to you, you will be aware that these regulations are due to come to an end on the 31st of March 2021. And after that date, accepted churches are required to register as a charity. Now, there is currently ongoing consultation on these arrangements. We do expect change, and we will be publishing updates as we have them, and these will be in the blog section of our website, with the first update being published today. So if you are an accepted church, you will need to keep an eye on those. The link will be in the follow-up email. The second item that is definitely worth a mention is that it's Charity Fraud Awareness Week between the 19th and 23rd of October. Now, during the pandemic, this has become a massive issue for charities. So we would recommend checking out the resources that have been published by the Charity Commission. And finally, I'd just like to take a moment to direct you to the COVID resources on our website. In particular, we've compiled a directory of resources for churches, charities, and full-time Christian workers, which gives details on the latest government guidance, schemes, and resources. It's regularly updated, so it's worth bookmarking the page for future reference. Right, now it's time to address your questions. If you have anything you have not yet asked, then just thank you both very much. Well, sadly, our time is up for today. Our apologies if you've asked a question and we didn't have time to get to it during the call. Hopefully the resources sent out in the follow-up email will answer any remaining questions. But if there's still something you'd like to ask after you've had a read through, then please do get in touch with us. Included in the follow-up email is a very, very brief survey that should take around 3 minutes to complete. I'm sure your inbox is full of them. However, we are constantly reviewing how best we allocate our resources in supporting you. So it's particularly helpful if you can just take a few moments to let us know what you think of this service. We'd like to know what we're doing well, whether there's anything else you'd like us to include. Ultimately, we're here to serve you, so really appreciate you helping us in this way. Now, our next dial-in is going to be on Thursday, the 4th of February, 2021. So do keep it free. We hope you'll be available to join us, and please feel free to invite anyone else who may be interested. We're keen to address the issues that directly concern you in your roles. So thank you to all of those who sent in your questions prior to the call. We will be inviting you to do the same in February, so do look out for details of how to send your questions in. And remember, if you'd like to receive the follow-up materials, just make sure you're signed up at www.stewardship.org.uk/dial-in. And now it just remains to say thank you to our panelists, Alan and Stephen, for taking the time to share their expertise and answering all of your questions. And thank you to all of you for joining us today. We do hope you found it helpful and will join us on our next call. We pray that you and the organisations that you serve will be both blessed and a blessing as you serve in your communities over the coming months. Thank you.